Where are Canada's energy markets headed this year? For insight, we're joined now by Andrew Botterill, Energy Resources and Industrials Partner at Deloitte Canada. Hi, Andrew. Thanks for joining us.
Good morning. How are you?
Very well, thank you. Let's start with natural gas. I noticed in your report that you're looking at increased LNG capacity and demand from data centers continuing to grow steadily. So can you flesh out those thoughts for us, please?
Yeah, absolutely. So 2024 was a little bit of a soft market for natural gas. But as we're looking forward into 2025, like you mentioned, LNG offtake, both in Canada, US, Mexico, all these projects that are coming on stream, on top of natural gas for electrification growth that's happening through all of North America, is really demonstrating a much more structurally sound market in 2025 and making natural gas producers a little more confident in deploying capital.
And because of these two trends, would you say that seasonality is maybe less important or not necessarily? Seasonality is always important when it comes to natural gas.
It is always important. You know, our furnaces all turned on this morning and heating our homes in Canada here. So obviously seasonality plays some role, but what we are seeing when we take a look back over the entire year, we are expecting a robust demand period for much of 2025 and on the backs of those projects that we've talked about already.
Now, in terms of investment growth, you're saying it is quite strong. In fact, it's the strongest since 2017. Why is that?
Well, you know, I think it's the two markets. One, we saw the expectation of the strong natural gas market here coming in 2025, and coupling that with the fact that we've had a very stable time in the oil market for really most of 2023 and 2024. You know, we saw prices in between $70 and $90 pretty stably. And I think that really propped up long-term investments and drove a lot of the activity that was there. So, you know, I think industry would always hope for that $80 and $90 barrel of oil, but being as stable as we've been over the last 2 years, I think has really put a lot of confidence in long-term investments and driving that capital spend.
You note that crude exports out of Canada are at a record high to the United States. President-elect Donald Trump says they don't need a lot of our products, supposedly, but certainly looks like they need our crude oil. So what's your take on current exports and what might transpire under President Trump?
Well, I think what can't be argued is just how fully integrated the North American energy market is. Our oil, our natural gas, and the United States really flows together and has for decades. The entire system has been built to that, to feed Midwest and to feed the Gulf Coast refinery complex for the U.S. So it's highly integrated. The value's there for both Canadian and American producers, and it's a big part of the picture of how we have the energy security that we have in North America, and I think that partnership is important. And I think with the talk of new policies and what that looks like, I think the hope is that cooler heads will prevail and recognize that this North American energy picture is important and it's an advantage for all of us and a long-term value for all of us as well.
Right, and because the U.S. is so reliant on our energy, do you believe that the tariffs are probably off the table?
Well, I think there's a lot of noise about it, absolutely. And I think most of our energy companies are focused on what are the structural supply and demand pictures for the coming year and how will that support their budgets. At the same point, we don't know what policy is going to drop in the coming 3 months. So we know our energy companies are looking at how do they protect their balance sheets. And if we do see tariffs come onto products, you know, consumers should expect to pay higher prices. And I would also expect that we'll see companies pare back some of their spending. But again, I think everyone hopes that the realization of how integrated our energy system is in North America comes to cooler heads.
Now, Andrew, can you broaden it out a little bit beyond Canada in terms of oil demand? We are hearing that maybe there are tighter supplies than expected. There's not such ample supply. Would you go along with that?
Well, I think a little bit. Like we certainly, as I mentioned, you know, $100 oil spurs a lot of investment. We've been in that 80 to 70 slide that we saw through much of the year. Again, that's still highly economic for a lot of our producers, but it doesn't mean that the big stuff is being done. So the long-term investment, the big exploration, isn't necessarily happening at the same pace. And so I think that also will bring some tightness into the market in the coming year. But the question always is will OPEC fill those volumes or not?
Right. And anything else you want to add from the recent Deloitte report on energy that we haven't touched on?
No, I just think with how structurally sound the market is I think we're going to see strong activity from our Canadian producers. I think budgets, will be robust as long as we see the politics kind of quiet as we go through Q1. So I know there's a lot of people that are watching it with close eyes, but they have confidence in the balance sheets that they have and the budgets that they're putting forward for this year, and recognizing the market's pretty stable.
And lastly, Andrew, we know that oil traded in a very tight range last year, much more so than usual, the tightest in several years, in fact. Do you see that continuing? Why was that, number one? And do you see that continuing? Because there's so much geopolitics, but it just kind of sludged through a very tight range all year.
It certainly did. And I think that tightness and the lack of volatility is what is driving some of the confidence in investment going forward, is the realization that even with Ukraine, even with Israel and Gaza, and even with those conflicts, the recognition is that the supply and demand was in a pretty reasonable balance through the most of the year. And I think there's a hope that that's going to expect to continue.
Thanks for your time today, Andrew. We'll talk to you again.